Assalamualaikum warahmatullahi wabarakatuh. Selamat pagi dan salam sejahtera untuk kita semua. Selamat datang dan selamat berjumpa kembali kepada Bapak Ibu peserta acara Professional Auditor Forum pagi hari ini. I would also like to welcome our speakers, Mr. Wan Cheng Loh and Mrs. Juan Lee. Thank you for supporting our events. Seperti yang Bapak Ibu ketahui, pagi ini Professional Auditor Forum akan membahas topik mengenai internal audit role in preparing ESG reports dengan narasumber Mr. Wan Cheng Loh selaku Chief Storyteller Black Sun Asia Pacific dan Mrs. Juan Lee, Director of Research and Strategy Black Sun Asia Pacific, dan dengan moderator Bapak Abdiansyah Prahasto yang merupakan Governor IA Indonesia. Ya. Untuk Professional Auditor Forum pagi hari ini akan berlangsung selama kurang lebih 2,5 jam. Untuk presentasi akan dilakukan selama 1,5 jam dan untuk tanya jawab kurang lebih 1,5 jam. Baik, Bapak Ibu, kita mulai saja untuk acara pagi hari ini. Kepada Bapak Abdiansyah Prahasto, saya persilahkan.
Baik, terima kasih Mbak Dewi. Assalamualaikum warahmatullahi wabarakatuh. Good morning, dear members, speakers, and participants. I hope you are well. We are pleased to welcome you again in Indonesia Professional Auditor Forum. My name is Abi, and I will be moderating today's forum. Okay, before we begin, I have a few housekeeping notes. So please be in mind that you need to remain on mute unless you are allowed to speak. And then there will be interactive polling during the session, so please participate. And then if you want to ask questions, please ask questions through chat box. You can direct message me as well, or you can directly ask by raising your hand first. If you want to ask in Bahasa, please do so. I will translate it to the speakers. And then don't forget, we will have photo session at the end of the forum. So please follow this forum until the end, ya, Bapak Ibu ya. Today's topic is about internal audit role in preparing ESG reports. As you have read today's topic synopsis, the Singapore Exchange or SGX amended one of its listing rules on January 1st, 2022 to require that issuers must subject their sustainability reporting process to an internal review. In the practice note to the SGX listing rule, it states that the internal audit function conducts the internal review and should be conducted in accordance with the international standards for the professional practice of internal auditing issued by the IIC. Bursa Malaysia has not made such internal reviews mandatory, but proposes to require a statement from the listed issuer on whether its sustainability statement has been subjected to internal review. It is clear from those two countries that internal audit will be playing an important role in sustainability reporting. How should internal auditors in Indonesia respond to such internal review requirements and champion robust sustainability reporting? Let's learn from our two distinguished speakers today, Wan Cheng Loh and Juan Lee. Wan Cheng Loh is Chief Storyteller at Black Sun Asia Pacific. He has more than 30 years of work experience in stakeholders engagement, corporate governance, risk management, and IT security. He is formerly president of the IIA Singapore, and prior to joining Black Sun, he was the founding chief executive of the Singapore Accountancy Commission, which oversees the Singapore Chartered Accountant Qualification Program. Wan Cheng is a chartered accountant out in Australia, Malaysia, and Singapore. With Wan Cheng, there is Joan and also Mutia Ananda, his team, that will also deliver the presentation. We will hear from 3 of them. Speakers will present for 1 hour and 30 minutes, and then followed by 30 minutes Q&A. So without further ado, let's start the sharing. Mutia, over to you.
Thank you, Pak Abdiansyah. I'm going to share the screen now, and we are going to have a full screen here. Okay, we'll stop sharing first. Okay. Good morning, participants from Institute of Internal Auditors Indonesia members. Thank you so much for tuning in this morning. My name is Mutia Ananda, and before we begin, I would like to introduce my colleague, Joanne Lee, first. After that, we are going to begin the session with Pak Wan Chen Loh delivering the drivers of ESG report. So Ibu Joanne has over 6 years of experience advising Asia Pacific companies on best practice communications across various channels, including annual reports, investor presentations, and websites. She advised companies on navigating governance and sustainability reporting requirement across Malaysia and Singapore. Prior to joining Black Sun, Ibu Joanne has 4 years of experience at the ACRA, Accounting and Corporate Regulatory Authority of Singapore under Ministry of Finance Singapore. And she was involved in stakeholder engagement and public policy. I will just briefly introduce myself. My name is Mutia Ananda. I have a bachelor's degree of political science and international relations from Universitas Katolik Parahyangan, Bandung, Indonesia, and also have a master of business administration from Singapore Management University. In Black Sun, my day-to-day task includes consulting companies in the private and public sectors to align with regional and international ESG reporting frameworks. And prior to Black Suns, I was involved in manufacturers companies' corporate entrepreneurship, innovation, and growth programs in Singapore. For Black Sun, we would like to introduce where we come from, of course. Black Sun is headquartered in United Kingdom in London. We help visionary companies and brands to define and communicate their purpose, strategy, culture, and performance. Our team of consultants integrate strategy, analytics, technology, and creative storytelling in a way no others can. Black Sun Asia Pacific is based in Singapore and have markets in Malaysia and Indonesia. And the subject matters, of course, Pak Wan Chen already introduced by Ibu Dewi and Pak Abdiansyah. Thank you very much. And we can begin on delivering the agenda first. So of course, this morning participants, the learning outcomes is for the participants from EEA Indonesia to acquire adequate knowledge about ESG reporting and standards and frameworks around ESG or sustainability reporting. And then for members to understand why internal auditor play considerable or significant role in preparing ESG or sustainability report. To provide insights for internal auditors to their boards and management in their companies on the process of ESG report. And lastly, how can internal auditors embark on the efforts and present the internal audit findings as well as later external audit findings and provide assurance of all ESG reporting matters. We will have a type at the end with Pak Wan Chen Loh, a dialogue or forum type of discussion. Please feel free for members and participants to interact or ask questions, both in the chat as well as directly in Bahasa Indonesia or in English. And now we are going to allow, before we embark, may we have the first poll to interact with the participants around the industry that you are in, as well as the knowledge of ESG reporting. Maybe Pak Abdiansyah and Ibu Dewi can help on the poll first. Okay, 83 participants left to poll. Okay, I think it's around 13% comes from banking, 12% from public sector, welcome, and mining as well, followed by insurance industry. Okay, we can go to the next part to gauge the knowledge of ESG reporting. Okay, we can go to the next question of Paul, Pak Abdiansyah. Okay, the last poll of the first session. How familiar are you with ESG reporting? Do you have basic, intermediate, or advanced knowledge on the ESG reporting? Okay. So we appreciate the poll answers. Most of the participants from Internal Auditor Institute Indonesia has basic knowledge that here, and it's a good indication that together we are going to learn about ESG reporting, the factors, the drivers, internal or external drivers, why ESG or sustainability reporting is such a hot topic today. Thank you for the poll, Pak Abdiansyah and Ibu Dewi, and we are going to now let Professor Wanchen or Wanchen here. The floor is yours, Wanchen.
Thank you very much, Mutia. Can you go to the next page, please? Thank you very much. Selamat pagi, teman-teman. Good morning, everybody. And thank you very much for attending the session today. I'm going to give you a few recommendations so that as internal auditors, you know how to proceed with regards to ESG and the role of the internal auditor. I think the first one, the tip is that with SGX making it mandatory for internal audit to have assurance on ESG reporting, is probably the first in the world, but it won't be the last. I think soon Malaysia and perhaps even Indonesia will follow that. This requirement for internal audit to review the ESG reporting process. Now, there's a big difference between auditing the report and the process. So the report itself is a static information only for each year, but the ESG reporting process is all year round. So one of the first tips is that all internal auditors need to do, including Indonesia, even though it's not mandatory now, is to start understanding the ESG reporting process. So it's not just the ESG report, but the ESG reporting process. How does the process start? The process starts from the stakeholder. So they can see over here. If you do your internal audit report in the traditional way, your internal audit report will go to the audit committee or the audit commissaries, and also perhaps you'll go to the board. But the purpose of ESG reports is to go to both external and internal stakeholders. So it's expected that ESG reports will go to external stakeholders like customers, suppliers, investors, definitely, regulators, and the communities. So you need to understand who reads your ESG report and understand what they're looking for. And that's the first tip, understand your stakeholders in terms of the ESG reporting process. There's also internal stakeholders like employees. They also want to look at your ESG report, and that's important. So the first lesson learned is to distinguish between the ESG report and the ESG reporting process. The Singapore Exchange requires auditors to review the process and not the report per se. So the second tip is understand that the starting point of the ESG reporting process is understanding who are the stakeholders that will read the report. Because by understanding who are the stakeholders that will read the report, you know what's important to them, and internal auditors can focus on that. So these are the rules of the listing rules. I will encourage you to read the listing rules for Singapore and to understand what the specific requirements are for the role of the internal auditor. Next page. And these are the external stakeholders. Can you go back to the summary page?
Oh, okay.
Page 5. Thanks, Mutia.
Sure.
Yeah, so listing rules is going to change a lot. So you're going to look out for that. In terms of assurance, so internal assurance is compulsory in Singapore, but external assurance is optional. It's not compulsory. That's quite interesting to note. So the role of the internal auditor will become even more important in Singapore because every single company in Singapore must use the internal audit to audit the ESG reports. Already, internal audit is mandatory in Singapore for all the listed companies. So it's compulsory to have an internal audit. It's compulsory to do ESG audit. And so the role of the internal auditor is really confirmed 100% has a very bright future in Singapore. And I'm sure the other capital markets in the region will follow suit. The second point, I talk about stakeholders, understanding who are the stakeholders that will read your ESG report. And there'll be ever increasing investor pressure for companies to issue ESG reports, not just for listed companies, but also for non-listed companies. Singapore just set up a national sustainability committee. And the idea is that Singapore wants to make ESG reporting compulsory for all companies in Singapore, not just listed companies. So the future is ESG reporting. So the first two lessons that I want to share with you today is one, start to understand what is the ESG reporting process. Secondly, understand that the starting point for the ESG process is the stakeholders. Then the third lesson that I want to share with you today is where does the internal auditor start? Let's say if it's required and you have to do audit of the ESG reporting process, where do you start? And the starting point is risk. ESG reporting is risk-driven, and the phrase that we use in ESG reporting is called material matters or ESG issues. Material matters are things which are important to stakeholders. You will come across this term very often. Material issue to stakeholders. What are the things that is important to the stakeholder? And that is your starting point for doing the ESG reporting process. And it doesn't matter. I see one question on whether the sustainability report is issued separately or together with the annual report. It doesn't matter because the role of the internal audit is not to focus on the report, but the process. The process starts with the stakeholder and ends with the report. And Ibu Mutia will share what happens in between in terms of the process. So as you know, internal auditors, we review processes for purchasing, for sales, for expenses, for inventory, for fixed assets. So focus on the process of developing the ESG report. How often do you audit the ESG report? ESG report is only issued once a year, but the process goes all year round. Let's say collection of data. The data is collected all year round. So the role of the internal auditor is all year round in terms of auditing the ESG process. And like I say, the process starts with the what are the key issues, what are the key risks associated with each stakeholder group. Who are the stakeholders? We have your investors, employees, the customers, the regulators, the community. So there are many, many stakeholders. And internal auditors need to understand what is important to each of these stakeholders and what do they want to see the company address as part of the ESG responsibility. So it's quite different in the sense that when you do a normal internal audit, your audience is investors and the board. So it's only typically two stakeholders, these investors and the board. But when it comes to ESG reporting, your stakeholders are both internal and external. And you need to understand what's important to them. And this is what we call material matters. And with that, I'll be happy to take questions before I pass on to Joanne to talk about what are the ESG reporting standards and frameworks to guide the process. So starting point is stakeholder. Starting point is also looking at the process. Starting point is also looking at who are the so what are the material matters that are important to the stakeholders. I see one question on adopting GRI, which is a good question. So GRI and SASB and TCFD, these are all standards and framework that drive the process of doing ESG reporting. And there are many, many standards out there, and hopefully you will consolidate. So recently, there's this formation of the International Sustainability Standards Board, or ISSB. So ISSB has issued 2 exposure drafts or 2 standards on climate change and on sustainability reporting. So you have GRI, you have SASB, you have TCFD, you have IR or integrated reporting, you have UNSDG. So there are many, many standards out there, but standards drive the process of ESG reporting. I've got another question here that why the report should be distributed to external stakeholders. Well, you may not have a choice because external stakeholders will want to see your ESG report and what is your findings in the ESG report. So the pressure is going to be very different. And with that, let me hand over to Joanne, who will help you understand what are the standards and framework that drive the reporting process for ESG reports.
Thank you, Wan Chen. Thank you, Wan Chen, for that very good overview. And thank you also to IIA for giving us this panel and platform to really share our knowledge around ESG and sustainability reporting. So I think before we jump, everyone is very keen to know how you should go about doing your internal audit for the sustainability function. But I think it's important also to take a step back and to understand what exactly it is required of companies as they prepare their sustainability reports, so that you'll be able to speak the same language with your internal stakeholders in the company. So with regards to sustainability reporting and what the regulations require, it's really based on each jurisdiction. So as far as we know, for Singapore, Malaysia, and Indonesia, there's no one particular standard that they would recommend that or enforce that you use, except for Singapore. When it comes to climate reporting, they have required that you use the Task Force for Climate-Related Financial Disclosures, as you see at the top left. So internationally, what we're seeing is a global trend towards using these international standards, because like it or not, whether you're operating in Indonesia, in Singapore, in Malaysia, you have stakeholders and you have your supply chain across and around the world, especially if you're a big company. So there is external pressure coming from jurisdictions where sustainability reporting is much more mature in their application. So I can relate one example of one of our clients. They belong to, they are in Singapore, based in Singapore, and it's a packaging industry and producer. And what happened was they have some form of sustainability reporting and data collection, but it was, at the very nascent stages, very early stages. But what happened was one of their clients, who is a very big a client of theirs, is based in US, and because of the regulations there, they have required that they disclose who what is the impact of their operations across the value chain, which impacts our client who's sitting in Singapore. So, like it or not, a lot of companies, what they're doing now is they are moving towards a trend of adopting international standards, which you see on the top half of the screen here. So in terms of reporting standards and frameworks, there's two ways you can think about it. So there are two perspectives that these standards are formed against. So the first perspective is the impact of the company on environment, social, and governance issues. So this sort of standards are around, for example, GRI and the United Nations Sustainable Development Goals. So these frameworks provide you a guidance as to what you can report to capture your impact on environmental factors, on social factors like human rights, and your management of these matters through your governance processes. And on the other side of things, the other perspective is the standards that help you measure the impact of environmental, social, and governance issues onto your company. So, for example, I think the easiest one would be TCFD. So, Task Force for Climate-Related Financial Disclosures. They essentially are set up to help companies evaluate and quantify the financial impact of climate change onto your balance sheet, onto your profit and loss. So if you use these two perspectives, that's what you call the double materiality perspective. You may have heard or may not have heard about this debate that's going on. So there are two perspectives. So one is from the GRI and SDG perspective, where it's the impact of the company on society, environment, economy. And on the other side, it's the TCFD, the SASB, Sustainability Accounting Standards Board, that helps you to measure the impact of environmental, social, governance issues onto your company. And bringing it all together is the integrated reporting principles. So I would say integrated reporting is a really useful tool. It's not just a reporting framework, but it helps you to guide the thinking around bringing together the financial implications as well as the non-financial implications of the company. So that's what integrated reporting is focused on. It brings together the entire organization and makes sure that the risk team talks to sustainability team, and all of them talk to the financial team. So it requires you to, for example, in your business model, link your inputs, your capitals, how you use your natural capital, your manufactured capital, your intellectual capital, how you use those and manage those capitals to generate outputs, and finally come up with the outcomes onto society and environment. So that's a very brief summary of the reporting frameworks and standards. And on the, sorry, Nithya, if you can go back. Yeah, and on the bottom half, you would see the sustainability ratings there. This is only the maybe 5 or 6 that are at the very top of mind. But there are so many types of sustainability ratings, and they all have different focus areas. One thing to note about sustainability ratings is that if you do not put out information about how you're managing sustainability matters, what they typically would do is they would take an industry proxy and they will apply it to you. So meaning to say that if you do not control your narrative, if you do not put out the information there, these companies will apply it for you based on what they observe from an industry-wide practice. So it may be, you may be worse off, you may be better off, but I think, but I mean, the advice that we give clients is, it's best for you to control the narrative and put out the information that you want to, so that the ratings that are given to you are reflective of what you're doing and the initiatives that you've undertaken. Okay, I see a few questions here. TCFD, IRSSB, and ISSB is part of IFRS. Oh, sorry, that's from Watson. If we look from an internal audit perspective, which ESG significant points or categories should be checked? Is there a benchmark or a list of inspection standards? For me, this will be addressed later on by Ibu Mutia in the later part of the presentation. And Irfan, question on what are the benefits of the organization in preparing the ESG report if it's not mandatory at the moment. So the point that I raised earlier about controlling your narrative, because if not, these ESG raters and rankers, they would apply, a rating to you. It may not be reflective of what you're currently doing. And it's also, to demonstrate that you are managing your sustainability issues well. I think it goes back to the principle that ESG, environmental, social, and governance risk, is operational risk at the end of the day. So it depends, because some of these risks are not material financially now, but they can be in the future. So we know, because we spoken to some of the banks in Singapore and Malaysia, and they have indicated that if a company can demonstrate that they are managing their sustainability risk well, they are in a better position to get preferential and better loan rates. So there is a financial impact towards providing this sort of disclosures. Is there a minimum requirement of how many material topics should be reported? No, there's no magic number to that. So it depends on what we call the materiality assessment process. So before you start providing any sort of reporting, you need to know what sustainability topics you need to report. And how you know that is when you start talking to your stakeholders. So there's this materiality assessment process, which we help our clients do, where you reach out to your stakeholders and to the company stakeholders, for example, the customers, the employees, the management, your suppliers. So everyone within that value chain, whoever who has a sphere of influence on the company, we discuss with them and find out what is important to them in their decision making. And then based on that, we prioritize which topics are at the top of mind for everybody. And then that goes into the sustainability report. So there is no magic number, as I mentioned earlier, about how many topics should be reported, but it really comes down to the outcome of those discussions that you're having with these stakeholders.
Joanne, can I answer Pak Tommy Susantio on checklist? So Pak Tommy, there is in Malaysia, there are 27 list of inspection standards, and in Singapore there's a list of in Singapore there's a list of 27 indicators, and in Malaysia there's a list of 10 indicators or benchmark to follow. So there are already standard checklists for internal auditors to use as part of the auditing process. So 27 in Singapore and 10 in Malaysia. Maybe Ibu Mutia can share on the chat list the 10 and 27.
Yeah. Of course, we can share it with you, and later on we also will discuss about what checklist is available for internal auditors in the next section. And yeah, Wanchen mentioned a 10 checklist, 10 indicators in Malaysia and 27 indicators in Singapore. In Indonesia, there are also we will share later the checklist or auditable items that is important for internal auditors to know. So we will go back to Pak Tommy questions again.
Thanks, Bu Mutia. And that's, I think, from Ibu Mauritania, question of what kind of audit report is expected. So the Singapore Exchange has not set out this format. So the format is quite open at this point in time. But I know that I spoke to the COSO people. You know, COSO is currently used for Sarbanes-Oxley for SOX. And they're going to create a COSO for sustainability soon. In fact, it's being developed right now. And COSO for sustainability will be issued sometime in November this year. So the audit format is going to be probably following COSO as a framework. So if I were you, I would start planning to use COSO as to guide the audit report format. So Joanne, back to you.
Thank you, Yuan-Chen and Thea. If we can go on to the next slide, please. Yeah, so I will spend the next few minutes talking about the various standards and frameworks that we covered earlier. So the Task Force for Climate-Related Financial Disclosures, TCFD, as I mentioned earlier, it's a very financial-based framework, but basically it has 4 recommendation areas: governance, strategy, risk management, climate risk, and opportunities. And what TCFD requires is that you need to identify the climate-related risks, opportunities, and impacts that it has on your financials. But at the same time, which is more related to your function as an internal auditors, TCFD also requires that you disclose the processes around collecting this data on climate-related risk, opportunities, and impacts. So when we talk about climate-related risk, there is 2 dimensions to it: transition risk and physical risk. So transition risk is the risks that a company would undertake as they are transitioning to a lower carbon economy. So like it or not, we see that trend happening globally, where there's a move towards using more renewable energy, less fossil fuels. So we have seen, for example, in Singapore, there's the imposition of the carbon tax. So a carbon tax, for example, and how much that would cost the company would be considered a transition risk. And physical risk, on the other hand, would be the risks that your company would be faced with the effects of climate change happening. So, for example, the rise of sea levels by however many cms, right? Would that put your assets at risk, and how much would that cost your company? And we also see, in recent times, the temperatures have been rising. So there's impact of these heat waves onto, for example, your electricity bills. So all of these are called physical risk. And on the flip side, there's also opportunities, right? So we've seen that a lot from energy companies, where they and even the banking sector as well, where for energy companies, they will pivot to renewable energy. So that would be a source of income for them as a result of this climate change trends. So in terms of the requirements for TCFD, as I mentioned, SGX has just made it mandatory starting from this year, starting with a comply or explain regime. So if basically you apply TCFD and you try to comply with the recommendations as much as possible, but if not, if you are not able to explain why you're not able to and what steps you're taking towards making sure that in the future you are able to meet those requirements. And Bursa Malaysia, they have recently put out a consultation paper about making TCFD mandatory. So this is upcoming. So the consultation just closed earlier in the year. So we're waiting to hear what will happen towards that. And in Indonesia, there is wide support for the adoption of TCFD. So companies are encouraged to, but right now it's not a requirement. So TCFD is one of those frameworks that speaks to the investor audience, because investors want to know how climate change issues impacting the company's financials. So it's a very financially driven standard. And SASB, the Sustainability Accounting Standards Board. So this is a standard where it combines both quantitative and qualitative metrics. And what's special about it is that it is industry-based and sector-based. And the principle behind SASB is that they want companies to report the ESG issues that are most relevant to the financial performance of their industry, because they believe that not all sustainability issues matter equally, and they can manifest differently across different industries, depending on the nuances of each industry. So that's why they have sector-based industry. So if you go sector-based standard. So if you go to the SASB website, you'll be able to download the set of standards that is based on your industry. So there's a SASB real estate standard, there's a oil and gas standard, for example. So again, this speaks to the investor audience because it talks about financial materiality towards the company, and it looks at 5 dimensions of material issues, which is environment, social, human capital, business model, and innovation, as well as leadership and governance. And with integrated reporting, so recently they updated the standards. So these standards has been around for quite a number of years, really, since 2012, 2013, if I'm not mistaken. And the idea of integrated reporting is basically encapsulated within that diagram that you see on the right here. So you start on the left, which is the blue parts, your financial capital, your manufactured capital, intellectual capital, basically the 6 capitals. Then it asks you to disclose how you use those capitals for your business activities, resulting in the outputs that you would see in green, that big square box in green. And what's interesting is with the recent update, they focus a lot on outcomes, which is the 6 capitals again that you see on the right, which is in green. So they want to see, you start out with a set of inputs, right? And after you run your business activities and all that, what are the impacts of your activity on, your capitals, and whether there's erosion, value adding, or you maintained it. So it helps to provide context around how the company is managing, its capitals, as well as the ESG that helps to enable the quality of your ESG information. So again, this speaks to an investor audience, but I would say integrated reporting is wide enough that you can plug in the impact story into the framework as well. And GRI. So GRI has topic-specific standards. So rather than SASB, which is industry-specific, GRI lists down their standards based on particular topics from the economic, environmental, and social spheres. So, for example, they would have a topic and a standard around water use, water management, energy use, and energy management. So it goes down the list that way across the EES spheres. So what is interesting is that they are also starting to put out sector-specific standards, I think because of the recognition that these topics apply differently across different sectors. So unlike SASB and TCFD, GRI speaks to a general audience. It provides information about the company's impact towards economic, environmental, and social aspects. And the last bit here, which is the UN SDGs. So you would see a lot of this in the sustainability reports, colorful boxes of 17 SDGs. So we always say that, the more SDGs we see in a book, the more likely you are to be greenwashing, because it's a very unlikely that you'll be able to meet all 17 sustainable development goals. So most companies, what they do is they would choose a few that are most material to their operations, and they focus on those. So what we're often seeing now is the rise of SDG 13, which is climate action, because of the increased importance placed on climate change. So as you can see, some of these topics within SDGs can be fulfilled in reporting using the frameworks that we talked about earlier, TCFD, SASB, and GRI. So you can, you would structure your sustainability reports based on your material matters, and then you can plug this UN SDGs inside your report after you're done. And before I go into the listing rules, let me see the questions list. Are there priority business sectors to start with this ESG report? So in Malaysia and Singapore, okay, wait, I'll start with Singapore first. So in Singapore, the sustainability requirements applied to everyone in like 2016, 17. Same with Malaysia as well. But if you're talking specifically about TCFD, there is a phased approach that they're taking towards this. So Singapore, it has identified, I think, banking, agriculture, food, and food sector, as well as energy sector, to start adopting it first. Can you advise on the rating agency standard in doing the assessment? Yes, your understanding is correct. These rating agencies all have different ways of doing it. So it depends on what your objective is. So for example, if you're an investor, for example, and if you, value the governance aspect a lot, then you might want to look at the MSCI ratings because they have a heavier focus on governance. So it really depends on what sort of aim you are going towards. And they all have different, as you mentioned, ways of running their assessments. And yes, the rating results do vary between the rating agencies because they are focused on different areas. And yes, it's very confusing. And that is why the sustainability reporting landscape is converging into the ISSB as far as standards and frameworks are concerned. So the ISSB, the International Sustainability Standards Board, which is set up by the IFRS, they aim to bring all these standards together and provide companies a single view of how to report your sustainability matters. Does an internal auditor need to be involved during the first time setup of an ESG report parameter? I would leave that question to Mutia after she has run her deck slide. Oh yes, and thank you, Wanchen, for that enlightened reply. Okay, if I may just give you some color around the regional listing rules. So in Singapore, as we mentioned earlier, there was an update towards the sustainability practice guidance and reporting requirements. Now, starting from this year, the SGX requires issuers to subject their sustainability reports to assurance by internal auditors. They call it the internal review. There is no guidance whatsoever that they have provided around what exactly you should do. But they have a sentence within the practice guidance. They say that for your internal audit review, you need to identify processes around sustainability reporting, which should be incorporated into your internal audit plan. Full stop. So there is, even among the Singapore internal auditors here, there is a bit of a scrambling as to what should we do, what do we look out for. So we are helping our clients try to figure that out as well. We are also on that journey. But in the recent update, they have provided a set of core ESG metrics. So there's a list of 27 core metrics for issuers to use as a starting point for their sustainability reporting. So the idea is to help to bring up the standards of sustainability reporting across the board, because before this, there is very varied application of in terms of the topics that companies report against. So with this core ESG metrics, it helps to bring up the standards across all companies. And in Malaysia, recently there was a consultation paper, which is a proposal to require a statement on whether the sustainability report has been subjected to internal review or independent assurance. And if you have done so, what is the scope of that review and assurance? So right now, both countries in Singapore and Malaysia, they do not explicitly require that you conduct external assurance, but Singapore is requiring internal review by the internal auditors. And in Malaysia, they are exploring proposals to make that a requirement similar to Singapore as well. And in Malaysia, they also have a set of EES, economic, environmental, and social themes that are set out in the sustainability reporting toolkit. So this would be the set of ESG, EES topics that most companies would report against. With that, Nithya, what are you seeing in Indonesia?
Okay. Okay. Maybe we begin this, and I think there are many interesting questions in the chat, but there are two slides left for the region, and let's conclude this part of our beloved Indonesia. So thanks, Joanne, for the explanation of the development of the Singapore and Malaysia listing rules. And now to touch base on Indonesia Sustainability Reporting List and Rule, it is encapsulated in POJK nomor 51 tahun 2017. So in the POJK, we spot the needs for issuers to actually report in Bahasa Indonesia, of course. Going back to the development of the ESG reporting standard and framework, sometimes your market is not just in Indonesia, it can also be in the region like Malaysia, like Singapore, like United States. So it is in the interest of the issuers in Indonesia from many sectors, banking, public sectors, to actually issue it both in Bahasa Indonesia and can also include international language like English, for example. And then we spot the need from this POJK nomor 51 for issuers to include environmental metrics such as energy consumption, emission reduction targets, waste and effluent reduction targets, biodiversity conservation and its progress. And these environmental aspects share commonalities with the international standards and frameworks we just discussed. For example, like SASB, GRI, UN SDGs share commonalities with the listing rule in Singapore as well as in Malaysia. So this part of the listing rule that is issued by Otoritas Jasa Keuangan, there's also the need to disclose the process to review the sustainability action. So what we imply from listing rule in Indonesia, there's a need to process and there's a need to review the sustainability initiatives decided by the board and all levels of the management, although they're not like explicitly saying the process of ESG reporting, but in general, this sustainability strategy atau rencana berkelanjutan. Moreover, the listing rule from POJK 51, the need to employ or disclose monitoring and evaluation system for each sustainability initiatives, including the methodology of the initiatives, of the strategy, the phases and measures. For example, is there a deviation between the initiatives or the action and its results or realization? So the monitoring and evaluation in POJK nomor 51 could review the statement of the governance as well as the statement of internal ownership of ESG issues and its reporting process. And then to actually monitor and evaluate the governing committee responsible to manage these ESG issues, including that of ESG reporting processes. Also to evaluate the timing, the time horizons, the periods being considered in responding to this, for example, ESG or sustainability related risks or opportunities. It includes governance, it includes social, it includes environments. And then to review and evaluate business response and the business mitigations towards this risk management. So for this, there's actually the POJK nomor 51 imply to have this review documented, to have these processes reviewed and documented. And of course, we hope to see the development whether in Indonesia, listing rule would consider to consult to the market whether the internal audit will be mandatory soon. But later on, we will going to advise or even discuss how can today internal auditor make a drive this significant process of ESG reporting. Okay, so here in Black Sand, we are coming to the midway, which is only 2 last parts of the webinar. In Black Sand, we research and benchmark FTSE 100 companies to understand latest ESG reporting trends and developments. This year alone, we just launched our complete 100 series 2021 edition. There are insights around materiality, diversity and inclusion, for example, and TCFD. So materiality already discussed by Wan Chen and Joanne. This is a strategic tool for companies and stakeholders to inform the long-term sustainability strategy for your company. And then you can scan the code to read more. And as we arrive in the middle of the webinar, maybe Joanne would like to revisit some questions. Do you?
No, Mutia, I think all the questions are addressed already.
Okay. Sure, Joanne, thank you. And may I ask from colleagues at EEA, Mbak Dewi or Pak Abdiansyah to run the mid poll? We have one questions or poll questions. The question of the poll, only one. It's actually to gauge how satisfied are you with the process of sustainability or ESG reporting in your company today. Okay, this is already have a good review, a good view that the majority is actually neither satisfied nor satisfied. I mean, it's neutral how you perceive the reporting process preparation in your company today, and that of course the desired result will be you are satisfied enough. Coming at every reporting year, you are satisfied enough with the internal processes related to ESG reporting. Okay, we can go to the last material presentation. So here, this is the internal audit role in driving ESG report. And this is probably another article wrote by Black Sun around how internal auditors can actually prevent greenwashing. In here, it pays to let participants know the World Economic Forum states that greenwashing takes two primary forms. For example, selective disclosure, which means reporting positive information regarding products and services and environmental performance while hiding the negative. And then second, greenwashing is symbolic actions, which means making claims that draw attention to minor issues without any accompanying or meaningful effort to reduce negative impacts. This is such a strong topic, and here is why an adequate internal control actually needed, because an inadequate internal control environment enables greenwashing. For example, lack of internal policies defining clear methodologies, there is lack of responsibilities, or in the way of implementation, there's no supervision, or there is no assurance of the whole ESG reporting process. Aside from unclear imperatives, a lack of training for each personnel that involved in ESG reporting may also enable greenwashing, although it is not intentional. So in here, participants may wonder why the first role of internal audit function is preventing greenwashing. So I would like to reiterate that there is a tie between internal audit function services with the outcome of greenwashing. According to international standards for the professional practice of internal auditing, internal audit should have sufficient knowledge to evaluate the risk of fraud and the manner in which it's mitigated by the organizations. But it's an internal audit function not expected to have the expertise of a person whose primary responsibility is detecting and investigating fraud. On the left side, it is an example where police raid Deutsche Bank in Germany, and the executive raid the executive's office in the case of greenwashing. This is done, or it is an outcome of a dubious criteria setting. This is the dubious metrics criteria settings and false reporting. So the company's management here led to the resignation of the CEO, as he was accused regarding fraudulent investment practices. It could have been saved by proper internal controls, saved by data verifications, saved by internal assessment. On the right side, we refer to 3 fraud risk factors defined by financial reporting councils: pressure, opportunities, and attitudes. There's a pressure factor. There's increasing threats of economic or industry or entity threats on their operations. So it is probably in the financial stability, or there is a relation of profitability. But as we are not here going to discuss about financial reporting, there is, of course, these risk factors also present, for example, intentional factors factor, such as or opportunity, which is provide the environment to engage in fraudulent non-financial reporting, engage in environment where it is allowed not to have the data verified, for example. And then lastly, for the attitudes, there is actually no enforcement or lack of enforcements by the internal or management or internal auditing function to enforce entities' values, the ethical conduct or standards by management, and which should have been effective. So the risk factors could enable selective disclosures at the end, because there's no robust assurance or robust self-assessments in the process of delivering the data or communicating all the sustainability data. And then also the interests or the opportunities to convey or display symbolic actions of that particular year in regards to ESG. This is potentially could lead to the fraud.
Here, may I stop you there?
Yeah,
Wanchan, I'm not sure whether you're seeing the chats, but there are a couple of questions. So the first one is, what is the penalty for greenwashing? And if I mean, if I may take that question first, then Wanchan, maybe you can add on. So right now there is no penalty for greenwashing, but it's I mean the wider stakeholder and the readers of the report are increasingly getting educated on all of these topics. So you will find lots of noise around, okay, how do you measure what you're saying, and how can I know that it's true? So there are a lot of questions also coming from some investor groups as well, who are starting to scrutinize the sustainability statements that you put out. Wanchan, do you want to add to that? Mutia?
Oh, sorry, Wanchan is mute.
Thanks, Mutia. Yeah, greenwashing is a borderline between telling a half-truth and telling a lie. And if you go to the extreme, it's really cheating. And I think there are criminal penalties or civil penalties for cheating. So greenwashing, I think, is a dangerous thing to do, because if investors rely on an ESG report to do their investing decisions, and it's found out not to be true, I think that's definitely is a criminal offense, and I think it's potentially a fraud. So that's why internal auditors' role in making sure that there's no greenwashing is important. Are there public sectors institutions to do ESG report? I'm not aware of any Indonesian companies, but in Singapore, quite a few of the lembaga already have done ESG report, like the PUB, the Public Utilities Board, which supplies water and power. There's Environmental Health Agency, I think. They've issued the sustainability report. And especially so for public sector institutions, sustainability reporting is very, very useful, because remember, sustainability reporting focus on the non-financial indicators. So things like culture, climate, diversity, all these are the things that's included as material matters. What's important? So you know that in the public sector, the lembaga, your key stakeholder is the citizen. So what are citizens concerned about? They're concerned about things like service level, speed of doing certain things, quality, friendliness, respect. But how do you measure respect? How do you measure friendliness? How do you measure good culture? And these are the things that's important for a lembaga or public sector, Kementerian, for example. So I would say for public sector is even more important, or just as important as for listed company. There's a question on green taxonomy. So green taxonomy guides green investments by banks, for example. So when companies want to borrow money, the green taxonomy would dictate how banks will lend to companies who are more green than others. So green financing, part of green taxonomy, encourages companies to adopt sustainability practices, because by doing so, they get the better rates from the banks. So green taxonomy is definitely will encourage companies to go green. And by going green, how do you prove that you're going green? It is through the use of TCFD, SASB, and with internal audit assurance. Then you can give proof to the bank that you have adopted sustainability practices. So it's all interlinked. And the focus, the main link is the internal audit, because you provide that assurance to the company, to the stakeholders, and the bank is a key stakeholder for the green taxonomy. So sustainable finance, sustainable ESG borrowing, that's another big area altogether. And the company can use the internal auditor to provide the assurance to the banks, and once again get better rates. And when you get better rates, you save money for the company. So you can see that the internal audit is not just providing assurance, but helping the company to save money, helping the company get reputation, better reputation with the key stakeholders. So the scope is really much wider than doing a typical internal audit controls or financial information or financial controls.
I guess I can contribute. Pak Rahadi. Pak Rahadi asks whether if consultant do the independent verification, do they need standard certification to do that? And what certification, or based on experience? Actually, this will be able to be greatly discussed later. We do have the where consultants or where external assurance is really needed, so we can go to that topic after this.
Yeah, one question that you may want to ask is that can internal audit get any certification for doing ESG auditing? So there's no such standard, no such certification, and the reason is because the frameworks and standards, they're all still all over the place. It's still very confusing right now. But the key thing I think for Indonesian internal auditors is to focus on TCFD, because must remember TCFD is not a standalone thing, it's part of a global adoption. So if you're part of the global supply chain and your company is part of the global supply chain, and your buyers, let's say you're part of palm oil or oil and gas, your buyers is in Europe, and the European buyers are TCFD compliant. So they also have to look at greenhouse gas emission scope 2, part of supply chain. Am I right, Joanne?
That will be scope 3.
Scope 3, sorry. So in scope 3 under TCFD, if you're part of the supply chain, your buyer will want to look at you, which is part of the supply chain upstream, to make sure that your greenhouse gas emission is reduced. Otherwise, the buyer won't buy from you. Very simple. So TCFD adoption is not just for compliance, it makes business sense. So as internal auditors, you really, really must know TCFD. So even to get any type of certification, go to the TCFD hub. So tcfdhub.org, and there's an online training. There's about 10 modules. It is really very, very, very good. There's an online exam for each of the 10 modules. I've completed everything. So I'm now a certified TCFD person. I wouldn't call expert, but it gives you very good knowledge on TCFD.
And to build on what Wan Chen is mentioning on TCFD, I think the focus on TCFD is because there is upcoming standards that will be issued by the International Sustainability Standards Board, the ISSB, which will converge all the sustainability standards and frameworks together in one place, so that companies have a single source of reference with regards to what to apply in terms of a standard and framework when you are reporting your sustainability efforts. And the ISSB recommendations right now is still in proposal stage and consultation stage. The proposals are based around the framework that TCFD has provided, which is the 4 areas: risk management, governance, strategy, and metrics and targets. So moving forward, if there is a global convergence towards ISSB standards, then you would see all your other sustainability topics within the social sphere, the environmental, governance, economic, all will be using the TCFD sort of framework around the 4 areas. And that's why Wan Chen is mentioning a lot about TCFD. So it's not just about climate. Moving forward, it may encapsulate the entire sphere of the sustainability landscape.
So if there's one takeaway for internal auditors by the time we finish this afternoon, for this weekend, go to tcfdhub.org and complete the whole course. So spend your Saturday and Sunday, get yourself certified. So they even issue a certificate for this tcfdhub.org. So do that, and I think you have taken your first step towards being a TCFD supporter and a knowledge person. Sorry, Mithya.
Yeah, I build on that topic also, because of course, if the function of internal audit here is to actually maintain an effective system and internal controls, and the increasing development of this ESG reporting or sustainability reporting standards, frameworks, increasing mushrooming the ratings agencies, for example, it is in the interest of internal audit to have knowledge of this TCFD. So because if the internal auditors will have the same understanding as, for example, communications function or sustainability function or CSR committees function, if internal auditor have the same understanding, then effectiveness will be maintained, which also roll out to the next how internal auditors are change makers, because the boxes below, for example, it paints day-to-day operations and risk management functions and function and tasks. So internal audit function considers this management task, especially ensure whether the right mechanism or frameworks have been embedded, have been deployed, and have been assured. This is from the colleagues in the first line of defense and the second line of defense. The first line is that the operations or management who make decisions, setting up the ambition of risk. The second line of defense would be the risk managers who are going to integrate all of this in the ERM. But of course, internal audit is as the third line of defense would ensure whether the assessment of the risk is robust enough, whether the risk appetite to achieve the objective or the strategy is already agreed by everybody, by the first line and the second line, and then whether appropriate culture and reward system has been embedded by the leadership, for example, and then whether risk management and mitigation methods are okay, are forceful, because the risk managers are absorbing all the impacts of this risk. And then internal and external information and communication processes are effective. That's why we are here this morning for the internal auditors to pay attention on the process of communicating, including that of ESG reporting. So not just financial reporting, but non-financial reporting. And then to whether monitoring and reviewing risk management process and control are adequate, of course. And going beyond primary role of internal audit function, just now we mentioned about going beyond non-financial statement. Of course, the internal audit always have the interest to evaluate as well as interest to improve the effectiveness of your company's governance, risk management, and internal control processes. Usually, it is already decades practice to disclose whether this improvement and evaluation already assured, and then it's also applied in financial statements. But today the environment demands something else, which is for internal auditors to also look into the environmental, social, and governance aspect. And increasingly, investors, like Wan Chen mentioned earlier, that this increasingly the stakeholders, including that external stakeholders, are looking into interacting with your company in a good manner, and whether your company is doing not just doing good but also doing well. So it pays for internal auditors to pay attention on the internal control on non-financial reporting process, non-financial statements. And then here there's a robust preparation of ESG reporting. Consider intentional mobilization of ESG matters. This will turn into series of benefits, such as improved corporate discipline, higher quality reporting and audit. This is the fewer accounting restatements, including that of restatement of non-financial accounting. For example, like environmental metrics or indicators, greenhouse gas accounting, for example, and then fewer opportunities and material fraud, because there's internal audit function who have ensured and assured that the process is with integrity and robust and transparent. And then there's also benefit sharpen corporate governance or directors' accountability. And then lastly, enhance stakeholders' confidence. Initially, investment community would look into your financial health, but the wider stakeholders would want to view your non-financial health as well. It increase their confidence in the resilience of companies moving forward, whether they are sustainable or not. These benefits, the 6 benefits, could translate in the lower cost of capital. Like what one should say, you are having a better lending discounts. Banks will give you good credits if you are like doing all the initiatives and reporting in the right way. It's lowering your cost of capitals as well as higher enterprise value if you're really seizing, not just mitigating the risk, if you're also seizing the opportunities. For example, through innovation, research and development, you will enhance your enterprise value by delivering other products or services, for example. Next, this is the example why there is a trend, why we are here this morning. There is a trend on the ESG reporting audit. The positive trend includes 49% world's largest companies include the audit process on their sustainability data. This ensures robustness, accuracy, and reliability of the data. The negative trend, we shouldn't say it negative, but this is also shared by every company as well as public sector. The demand to report this ESG data will increase, and the demand to verify it will increase. This includes the data related to environment or climate, employee or human welfare, or other efforts, or corporate governance. This high demand of verified ESG data means that companies will need to fork more money, and because there is additional initiatives beyond reporting financial statements, there's additional initiative to collect ESG data, to calculate the ESG data. For example, like the greenhouse gas or emissions, energy use, waters, or biodiversity targets. And there's a need to initiatives to verify and report this. So there's a need to fork more money. And as the article said, actually the ones who benefit is the people who already know how to audit the accounting financial statement, as well as increasing external consultants knowing each area, knowing other areas of the company, for example, like environmental areas and social areas, which we're going to go discuss later. Now on to the next, or before this, we are going to see whether there is a chat. Can you share from Johannes? Yeah. Can you share to us example sustainability metrics? Thank you. So the sustainability metrics we refer to now, the regional ones. Why the regional ones? Because of course, before we are trying to align with international standards, we must know for participants in Indonesia, the POJK nomor 51/2017 also need companies to disclose their for example, carbon emissions, their energy usage, their waste and resources, materials, counting their materials, for example, and then biodiversity impacts and quantify that impacts, for example. But these sustainability metrics are available in the international standards such as SASB, what Joanne mentioned just now, and then even in UN SDG is your sustainability metrics if you want to connect or interact with the general audience. But of course, what Wanchan said just now is that if you want to connect or interact to the financial community or investment community, you can consider to use the TCFD, because the metrics and targets there actually comes from the opportunities, climate-related risks and opportunities that can be quantified. So the sustainability metrics are always available in the regional listing rules, as well as in the international standards and frameworks. Okay, we're going to go to the last bit. So after this last presentation, we will have a forum again, a dialogue with Wanchan and Joanne and myself. And feel free to ask again your questions still at this session. In here, I think you can also connect with us in Black Sun by scanning the QR code. This is how should we present findings in ESG report, and then why is this slide? Because we want to show about our thinking in order for you to present the findings and in order for you to audit, we would like for participants to consider to have an integrated approach. So first and foremost, avoid disintegrated thinking. In this article that Black Sun wrote, integrated thinking is where you treat this reporting project. Disintegrated thinking is where you treat the reporting project as an annual or project-based effort, instead of ongoing and integrating all sustainability matters or with the company's non-financial and financial health into the creation of companies' reports. So this integrated thinking is here because of there is lack of common language. So if risk management function talk about some risk, but the management did not talk about the same risk, did not acknowledge the same risk, they are talking with different language. So this morning outcome from this session is for internal auditors in Indonesia to consider having the same understanding or common language with other function, with the risk function, with the CSR function, with the board, with the also all levels of employees. This will smoothen the process of ESG reporting. And then this is not just going to be for reporting period only. So it's valuable for your company as an internal auditors to catalyze and brainstorm together and see what's the best strategy to actually responding to sustainability related risks and opportunity. So you can read about it in our website. And here it is. This is the integrated process and going beyond project mindset. So on 6 February 2018, World Business Council for Sustainable Development, or WBCSD, and COSO released a draft guidance on ESG risks. This guidance provides a checklist on how companies can readily identify whether they can manage ESG related risks today and adapt and respond to tomorrow's uncertain scenario, uncertain condition. So in this guidance, there are checklists that is interesting for internal auditors, for internal auditors to check or assess or diagnose the health of your company's ESG standings. So the idea in here is actually to integrate processes and go beyond once a year project. Ideally, all managers and employees acknowledge sustainability, acknowledge its ESG area, and also drive the reporting together. It's enabled by common language and clarity of purpose. And again, internal auditors can refer to COSO and WBCSD checklist for that. And moving forward, you can drive the pursuit considering 2 reporting framework. Joanne already has, she already discussed about it's very beneficial for internal audit and other function to consider integrated reporting, as well as to consider the 4 areas of TCFD recommendations. Since that this morning we are here to discuss ESG reporting, consider to populate what are the 6 capitals of integrated reporting. For example, financial and manufactured capitals, natural capitals, and human, social, and intellectual capitals. And then again, merge them with TCFD recommendation. As you can see, there are 4 pillars. There's a governance, and then there is a strategy, risk management, as well as the metrics and targets derived from the climate-related risks and opportunities. Hence, this is, we feel, an integrated approach to reporting beyond just financial, but of course with financial standings. In this next slide, now, how do we present the internal audit findings or embark on the ESG reporting process? First and foremost, we must ensure the integrity of the preparation process and the quality of ESG report. The process as inputs and the ESG report as the output should have 5 guiding principles. It's relevance, principle, completeness, accuracy, consistency, and transparency. These 5 principles is going to be useful for internal auditors, and it's going to be useful also for the users, internal or external users, such as investors and wider stakeholders, to make an informed decision to interact with your company. In the next slide, we're going to see how internal audit function can consider these 5 principles. So in this slide, this is an actionable part of our webinar, and we approach the ESG reporting dynamically by considering the potential failures in the reporting project, as well as internal control and external control. We also consider the frequency or the severity of such failure and think whether there is a remediation programs that can be done through training, for example. Or if it's not through training, what else can we consider to remediate? So we want to go back to the principles that makes ESG report useful. You can consider, for example, failure in obtaining relevant data. Here, lack of relevance. You can consider, for example, to appreciate whether the report content reflect true data representing the overall health of the company in relation to sustainability. Incompleteness here, the cause of incompleteness, you may check if the reported data includes all operations, levels, all markets, and then all aspects that impact your company in relation to ESG. The cause of intransparency, for example, you can appreciate or check if the reported data already have audit trails. This is to ensure the integrity of the report because everything has been audited. And then there is consistency. Ensure that there's a consistent methodologies being used in reporting. For example, if last year is GRI, you can have a GRI this year with consideration of TCFD, as well as even supplement that with SASB just to connect with your wider or external stakeholders. Lastly, accuracy. Look into the cause, whether this data collection and quantification is accurate enough for users to base their decisions to. This is the green part where the internal control is actually have the control of. And for further assurance, in the orange part, it's where the external control can be in the can participate to provide a more robust ESG report. This is where they could control as the external control would not consider the where other areas, as this is more of the leadership or board or management decisions. So we are going to see example in the next slide for both internal and external. This is the company of Shell, Shell 2021. Why do we put in this webinar the companies of Shell? Just because of the maturity of reporting only, and that they do have disclosure about our data here, which is included in their report. There's internal assessment that they do, or internal review or internal audit that they do, such as self-assessment at the facility level, internal audits at all levels of Shells, and then they have quarterly reviews and assessment of the data at all levels as well, and annual series of meetings between leaders at group level and senior business managers to discuss outcomes and reporting parameters, which is the metrics, and formal sign-off by the senior country leaders to acknowledge their standing today for ESG. This could be considered by other companies to have to disclose and speak to internal and external audience that you have done this internal control and review. The next one is in external. Internal auditors may need external specialists or external specialization skill set required to conduct robust fact-checking in the other areas such as environment. For environment and social. For governance, actually internal audits are very familiar and then can act as a guide to external auditors to verify the process, to verify the data through conveying your company's or sharing the company's ambition to your consultants or to your independent assurance. Environmental indicators, for example, not all internal auditors comes from the background of environmental science, and such as the greenhouse gas accounting, the ability to conduct scenario analysis, and then to conduct emissions and how that how this accounting will be tied to, for example, potential carbon tax later. Environmental specialists here will be your help, will be internal auditors' help to conduct the assurance. And next is social indicators. The internal audit function may need to engage specialists with the skills and capabilities to review, again, human capital, for example, the policies of diversity and inclusion, for example, and then other social capital aspect and integrations in the company strategy, because increasingly we are seeing many other for example, like culture, having an impact to companies' innovation, for example. And then governance indicator, internal audit has the most prominent role here, observing the company's responsibilities, policies, whether the risk management are properly embedded, and whether it is integrated in the ERM. And of course, internal auditor interested to know how this is going to impact your stakeholders, as you will also connect with your wider audience. So ESG report should be reviewed holistically by internal audit function and with the help of external verification. If in fact that the internal audit have the environmental capabilities or skill set, then it's a positive thing to have. And this is the example only, external assurance engagement examples from big companies such as Apple. Apple uses Apex, Bureau Veritas, and the Fraunhofer Institute to check its environmental metrics and has called for mandatory third-party verification of emissions data. Amazon hired Apex to validate its carbon footprint and renewable energy data 3 years ago, and considering having other information checked there. Walmart has emissions target or emissions data verified by a third party as well, and plans to expand external validation to other other ESG data. Okay, so we arrive at the end of the materials delivery, and we'll embark on the dialogue and engage with you. And Pak Wanchan, Joanne, and I will look at the chat, and then if you have more questions, please have a chat, tap in the chat, or just speak directly. Wanchan maybe wants to share as internal auditor, where do I start, Wanchan?
Like I mentioned, the starting point is really the material issues because it's risk-based. So the skills of the internal auditor is largely there. The only thing that internal auditors need at this point in time is knowledge of the TCFD, knowledge of the metrics like SASB, GRI. It may look a bit intimidating now, but once you start, it's not difficult. For TCFD, I must emphasize that it is a framework. It is not a standard. You cannot get certified. There's no checklist. It's not an ISO standard, so there's nothing to checklist. It's a set of 11 recommendations, and there is a challenge. Like, how do you comply? You can't comply with TCFD. It's not a compliance regime. There's a question on how to ensure if our partners implement ESG concerns. So partners meaning that your business partners, your suppliers, and part of the supply chain. I think Rumaji was asking the question. So the assurance is really getting your partners to issue a internal audit assurance that they've done ESG reporting properly. So the guidance to so another good question is how do you measure whether an ESG report is good or not good? What does good look like? And it depends on the stakeholder. That's why the second step of one important step of ESG reporting is to understand your users. So what do your user want to see? And we realize that there are many users, many stakeholders, both internal and external. So you must customize your ESG internal audit report to the specific stakeholder. So the stakeholder could be consumer, could be the bank for your green taxonomy, could be your supplier, could be the regulator, could be the stock exchange, could be anybody, could be the customs of a country. They may require to see that internal audit report. So the importance of the internal audit report is really amazing. You know, internal audit, your role is really quite solid in the company. So I always wonder, why do you need external assurance if internal audit can do it? And I say that your assurance on ESG reporting process is not a one-time effort, but it's all year round, because the process can be quite complex. Yeah, so get your partners, understand what your partners want to see, or what do you want to see from your partners with regards to their ESG issues. Are there any specific skills that IA should have in order to perform ESG audit? Now, ESG audit, like what Ibu Mutia said, is very, very broad. E is for environment. So environment is TCFD knowledge. So you're going to do environment audit, you need to understand TCFD and SESB. And then greenhouse gas emissions, scope 1, scope 2, scope 3. So it's very a bit specific. But you know, audit the S, the social part, and you come from, say, a public sector. So we talk about service level, integrity, culture, reliability, efficiency. How do you audit that? So this is where you talk about value for money skills. How do you measure efficiency? So how do you measure throughput? And then for the G part, most auditors, in fact, all of us as internal auditors, we understand G, which is governance. So we understand the 3 lines of defense, we understand ERM, we understand COSO, we understand purchasing, sales, expenses, fixed assets, liabilities. All those we do every day for a long time. So G is okay, no problem. We tick the box already for G skills. E skills is already quite well developed. I mean, E knowledge is quite consolidating, but S knowledge is very, very broad. How do you audit, let's say, how well you're serving the community? So S is an underdeveloped field. Joanne, you wanted to say something?
Yeah, Wanchen, I was going to ask something on my mind, and maybe it might be useful for participants as well. Wouldn't an ESG audit and a regular, run-of-the-mill internal audit require the same sort of mindset from an internal auditor? That doesn't change, right?
No, the internal auditor should be, mindset should not change. So there's a question on what are the social and governance issues on ESG reports. Governance issues is similar with normal internal audit report, meaning that the issues will be, say, things like tone from the top, board oversight, internal controls, proper risk management, having proper policies, procedures, how do you select metrics? So those are the governance issues. Social issues will be things like culture, diversity.
Yeah, may I also add to Anshan, for the governance, for example, found in ESG report, some of them is also in the annual financial report, the financial and audited report as well, and corporate governance also is a place or medium for you to convey or display the accountabilities and the structure, including the structure who own the sustainability issues and processes, as well as the ambition of the corporate governance on ESG issues. So it is in the corporate governance sections usually, but if you are looking into separate governance report, some of governance, like Wanchen mentioned, PUB in Singapore, governance function in Singapore, also it's in their interest to convey the how they are acting towards public interest. So how this governance actually showing of all the efforts, of all the fundings, and what is the outcomes of their initiatives on governing on applying for this public interest, for example. And then social, I guess some of in Black Sun in our in our portfolio, I think we also issue nearly like cultural or impact reports where the companies is interested to showcase what it is that they have done in terms of social, what it is that they have done in inclusion and diversity, for example, what it is that they have done in educating or alleviating the poverty, for example, and then giving jobs or opportunities for other countries in the developing countries or less developing countries. It's in the companies or other public entities' interest to issue a separate social report or as a separate governance report. But most of the issues should be integrated in the sustainability report and at least together.
Yeah, thanks for that, Mutia. Before I answer Tondi's question on how do you get involved in ESG implementation, there are many terminologies used for sustainability report. Some call it impact report, social report, ESG report, sustainability report, and whatever report or climate change report. So whatever name we call it, it depends on who the stakeholders is. So let's say, for example, Gojek. If Gojek were to issue a report, they will call it probably an impact report. So what Gojek does is that what's the impact on employment in terms of food delivery, in terms of drivers, impact on the income of the family, education of the children, safety, the health of the delivery drivers, of the Gojek drivers. So all these are what we call non-financial indicators or non-financial metrics, and many companies issue impact reports. It's a type of sustainability report, but the measurement is very S-driven, so social-driven metrics.
Other example is Bukalapak, probably, Wanchan, that we just observed the company in Indonesia helps, for example, like Gojek making Gojek driver or Ojek drivers, and Bukalapak also considers allow or enable Indonesia community to buka warung, opening your toko, that it really alleviates the poverty, and it's in this company's interest to showcase what's their impact to society. It's in the interest to connect with not just customers who buy, but also, for example, how can other people from other country learn from example from Gojek or from Bukalapak because they disclose such a good cultural or social or governance report.
Yeah, in fact, the issuance of a sustainability or impact report is what we call license to operate. So, and I think there's no doubt that companies are set up to make money. I think but to make money for one particular stakeholder, which is the investor. So you make money for profits, for dividends, and that's important. But in today's world, there are other stakeholders like the community, the consumers. So they must be addressed also. So they're not interested in profits, but they're interested in safety, social impact, health, environment, ethical practices, no greenwashing, for example. So that brings me to Tondi. So Tondi has a question on how does internal audit get involved in the starting of ESG implementation. So the starting point of ESG implementation is to identify what's important to the stakeholders, what's material. So in terms of identification, the internal auditor need to get involved to see how they identify the stakeholders. Is it properly identified? Is it complete, correct, accurate, reliable? So all these are terms that you're familiar with, but you need to apply it to how you understand what's material to the stakeholders, what's important to the stakeholders. So the subject matter may be different, but the skill set is the same. Completeness of stakeholders, accuracy of data collected from stakeholders, compilation of the material matters for each stakeholder. And stakeholders are by country, by region, by partners. by internal, by external. So how this information collated. So that's a starting point of ESG reporting. And then as part of the process, once you have identified material issues, how do you measure them? And this is a selection of the metrics. So you measure them using SASB or GRI. So how do you know that the right metrics has been selected? How do you know that data has been collected properly? How do you verify it? How do you ensure accuracy, completeness? So the skill sets once again remain the same, but it is the whole process from start to finish that your internal audit need to get involved in. So don't get mistaken that it's only the report. You look at the ESG report, actually it's quite useless. You need to understand what's the process that led to the ESG report. There's a question from Shindy.
Oh yeah.
As to thanks, Tondi. Chini asked, how does ESG audit implementation in the private sector may differ? I think the scope will differ in the sense that public sector will be more focused on the S because it's non-financial, or largely non-financial. Whereas for private sector, the stakeholders are more financial driven. So consumers want to know things like value for money, for example. Whereas for the public sector, you may not pay money for a service, so it's part of the government's obligation. So things like service level, things like friendliness, things like efficiency. So I think the scope is going to be different in terms of ESG audit for public and private sector.
Wanjan, maybe if I may ask, I remember that we discussed this before the webinar. How would an internal auditor educate the board or to get buy-in to embark on the ESG reporting?
Good question, Mutia. For the board, traditionally, it's about making sure that the company makes money. The strategy results in making money. One missing link between sustainability efforts and what the board wants to see is that doing good must lead to doing well. So doing good means ESG, sustainability, but if it doesn't lead you to doing good, then it doesn't matter anymore. Let me share a diagram with I just conducted the training yesterday. Let's hope I can find it. Let me share my screen. Oh, can someone let me share screen, please?
Okay. Oh. Can you share now, Wanjan?
Not yet.
Okay, you are co-host now. Sure.
Thank you, Mutia. Appreciate it. If you look at this screen here, this is what we call an integrated approach. So where does climate change TCFD fit in? It's in this black circle here. Now, the starting point is most organizations are familiar with is mission, vision, and strategy. So companies are very familiar with this. And internal auditors would typically audit these areas, the what you do, how you do it, and where do you want to go. So mission, vision, strategy are familiar things to internal audit. As part of mission, what you do, you have internal controls. Yeah. Now, for sustainability reporting, the starting point is stakeholders and why you do what you do for the stakeholders. So purpose is driven by stakeholders. One example of a stakeholder is your investor, your shareholders. So you want to make profits for shareholders. So why you want to make profits is for shareholders. Why you want to make profits? It is for investors. Why do you want to produce products which are safe? It is for consumers. Why do you want to produce goods which are within the law? It is for regulators. So your why, your purpose is driven by stakeholders. And the issues that are important to stakeholders are things like safety, health, profitability. So ESG issues are what we call material matters. I've already mentioned that material matters is a starting point for doing sustainability reporting. And material matters is driven by stakeholders and what you're going to do for them. If you manage the ESG issues well, then there's opportunities. You don't measure it well, it will lead to erosion in value creation. So climate change is an issue for the community, and the community is a stakeholder. And climate change is driven by TCFD, which is the process, and you measure the climate change using SASB. And if you manage climate change well, it will lead to opportunity, and the opportunity will lead to value creation. And value creation means that you lead to you doing well. So by doing good, you do well. It's a license to operate. And this virtuous cycle is what we call integrated thinking. And it leads to, of course, integrated reporting. As an auditor, how to start to promote ESG matters to management? I don't recommend that you start from audit results because it is audit findings, and you know that audit finding, you always quarrel with the auditees. I think it's important to start from how you create value by doing ESG, by promoting. If you deal with ESG issues, you can create value for the organization. And I suggest you use case studies of how other companies create value for themselves by doing good. So how do you do well by doing good? If you do good on the left side, you will do well on the right hand side. And the link between the left and right bullseye is through linking your purpose to stakeholders. So I would suggest that you share this diagram with your management and team to convince them that there is value created for the company by looking at ESG issues.
If I may add to that one, Jen, going to the primary function of internal audit, the assurance function and consulting function or the services, I think it pays instead of from the result, it pays for internal audit to participate or to be involved in the first start of ESG reporting. We go back again to materiality as a strategic tool, or where the list of the risks or the matters or the issues of sustainability being considered in the strategy of the company, which is discussed by the board as well as reported to the audience. So it pays for internal audit to start at the consultative, being a consultative presence as well as being the assurance presence, by knowing all the diverse frameworks, and also by knowing what's relevant in the market, in the regional market, as well as in the listing or in the country. This is a good step for internal auditors to embark or to participate. So it's not just internal auditor is outside of the function or outside of the process, but instead being involved from the first time as their consultants, as their ushers.
Yeah, good point, Mutia.
Yeah,
So,
okay, very quick one from me.
Go,
Yeah.
go ahead, Joanne.
So we've been interacting with the sustainability teams a lot on the client side. Basically, the way I see the sustainability reporting process is three parts, right? So there's the materiality assessment portion, where as Mithya has explained, that's where you determine what you want to report on. And to identify what to report on, you have to consult your stakeholders. So for that, maybe for the internal auditors, it's looking around the processes of that materiality assessment. Are you even engaging the right stakeholders? Maybe, for example, there is a minority group, for example, let's say it's an NGO that is very vocal, but actually has very little impact on and influence around your company. So would that be the right stakeholder to engage? Are we listening to the right voices even? And in the materiality assessment process, like, are we asking the right question? Are we holding the interviews or the focus group discussions in a way that can elicit the best responses? So are we focusing at arriving at a point where we are getting the right topics to focus on in the first place? So that's the materiality assessment process. And then the second part of the sustainability process is the data collection part. So perhaps the focus may be around the process of selecting the right metrics, selecting the right boundaries around where you would report your data on. So for example, if you operate across many countries, is your data collection only for a particular subset of countries, or is it across the group? So and that has to translate into the communication portion of it. So I think Mithya also covered a little bit about what to look out for in terms of the reporting aspect of it, whether it's complete, reliable, comparable. So yeah, I see it across these three spheres. If you want to look at it from a sustainability reporting process, these are the three main categories: materiality assessment, data collection, and the reporting and communication aspects.
Wenchen, and Joanne, do you have suggestions? How often do we need to audit the process or review the process of integrate or of ESG reporting?
In terms of the auditable areas, it is very process driven. So each one of these circle is a auditable area. So you ask myself, your ESG audit universe is these two circles here, these two bullseye. And you'll be all year round. So it's a matter of scheduling. And it doesn't need to be finished in 1 year. It could be over 2 years or 3 years. So let's say TCFD is here. There's a question of how do you integrate operational audit with ESG audit? Operational audit has a lot of elements of ESG audit. So I won't say overlap, but you can take what you have done for operational audit and call it ESG audit, especially the S part. So when you do operational audit, you would do things like VFM, effectiveness, efficiency, economy, which is VFM, and a lot of the VFM audits are similar to the S part of ESG. So hope that answers your question, Pak Yoga. Especially public sector, if you're with the, say, Auditor General, you would do a lot of VFM audit or EEE audits. So don't be afraid of doing ESG audit. You have the knowledge in terms of the skill sets, and you have done operational audits, and you may look at TCFD and say, wow, so complicated. Actually, it's not.
Wanchan, if I may ask, right, for the audit, internal audit function, there is, for example, set of policies, set of terms of reference. There's, for example, environmental health and safety, where it's actually, it pays for internal auditor to view whether the company or whether the entity has embed this environmental health and safety policy in a proper way. And do you think it's the same with environmental, social, and governance policy or terms of reference, for example?
Well, definitely. Let's say, for example, you want to audit culture. A good control culture is having a code of ethics. So having good ESG policies and procedures, manual, I think that's part of internal controls. So it's good to have them. Joanne, there's a question on carbon trading. You want to take that?
Sure, Wanchan. So the question is, explain the overview of carbon trading. What's the role of internal audit in the activity? And relation of ESG report in carbon trading. So I suppose this is about carbon credits, is it, Wanchan?
Yeah, it's how do you buy and sell carbon credits?
Mm.
And then what's the role of ESG report for that? That's what I imply from Pak Gus Rinaldi's question.
Yeah.
Yeah, it's a bit technical for me. Maybe I can take that separately.
Okay. Well, carbon trading is really the buying of carbon credits or units. Take, for example, a factory. A factory uses power to produce goods, but when you use power, you will emit greenhouse gas. And how do you offset the greenhouse gas? But you go and buy carbon credits, and you buy carbon credits from, say, a forest company who sells carbon credit to you. So buying a carbon credits help to offset your carbon emission, so that you achieve this target of what we call net zero. So the role of the internal audit will have to know that whether it's greenwashing, whether the carbon credit, first of all, is real. Are you buying the carbon credit from a real forest? Is it a real carbon credit? Has the carbon credit been certified? And how do you offset against your carbon emission? Is your carbon emission, let's say scope 1, scope 2, scope 3 carbon greenhouse gas emission, has that been certified? And is the offset done properly? So that is carbon trading, and your audit report definitely, if you have carbon trading in the company, that's an auditable area.
If I may add to that as well, Wanchan and Joanne, that the ESG report role for sure has to, we come back to the lesson earlier, it should be transparent, it should be comparable and accurate. And ESG report role in here for the carbon trading, of course, for all the actors in the carbon trading, whether the buyers, and then whether they would like to engage in a transaction or trade, they will refer to this ESG report. So it's important, again, Wanchan said, not to have, it's important for internal audit to prevent the greenwashing here, just to convey the accurate data and then the integrity of data, because this makes transactions becomes the transaction that's solid for each actors.
I also build on that. In terms of what is an acceptable level of using carbon credits, right? The guidance out there is that you would list out, for example, let's say as a company you have emitted 100 tons of greenhouse gases. So you must demonstrate that you have implemented various initiatives to reduce this amount of carbon emissions, and only the very undiversifiable carbon emissions, right, you can purchase a carbon credit against. So that would demonstrate that you are in fact practicing green practices and making a genuine attempt to reduce your greenhouse gas emissions. If we see, for example, a report that says we are going to achieve net zero by an unrealistic target, for example, like by 2028 or 2025 or whatever. But if we look at the greenhouse gas emissions and we find that 90% or almost 100% of it is done through carbon credits, then it may be construed as you are not being genuine in terms of making these reductions internally. So that may lead to an accusation that you are actually greenwashing.
Thanks. There's a couple of questions, if I can answer them. What's the role of the audit committee in implementation of ESG reporting? A very good question. So audit committee typically look at internal controls, because your audit report goes to the audit committee. Audit committee also have oversight over the external auditor for the financial statement. ESG is non-financial matters. So by default, it does not go to the audit committee. But when you look at financial statements, when you do good, it also will lead to doing well. So then it should and should not go to the audit committee. But ESG is also risk-based. Remember, material matters. So it should go to the risk committee. It should go to the audit committee. And then some companies set up a sustainability committee. So it go to the sustainability committee. So that is a problem right now. Where does ESG reporting go to? Audit committee, sustainability committee, or risk committee? And that problem is not solved yet. So my recommendation for now, is for ESG reporting to go to the risk committee first. Because a lot of the impact on sustainability on the bottom line is still not clearly linked yet by companies. So no point you go to the audit committee where they can't see the impact on the bottom line. But for risk, it's very clear. If you look at most sustainability reports, there is a discussion on material matters, and there is a material matters matrix, which is driven from a risk mindset. So what you need to do is to take the material matters and link it to your ERM framework, to ISO 31000, so that there's an integration between ERM and ESG material matters. And that then goes to the risk committee. That is a very good starting point, because you're dealing with something familiar and logical. Next step, then we decide. And once the things are clearer, then you take the next step. Who are the auditees? Middle level, senior level, or lower level? Well, because it's process driven, it's probably at all levels, even the board level. So the tone at the top is there board oversight over sustainability, not just reporting, but the sustainability processes. Who is involved in the data gathering? Who's involved in designing the processes? So I would say at all levels. There's a question on which part of ESG is the most important to prioritize on. As to be contained the three things, or I would say G, and two reasons. First reason is that internal auditors are very familiar with G, the governance part. So you'll be like a fish to water. You're comfortable in doing the G. And secondly, without G, the S and the E does not work. So the tone at the top, the oversight over ESG must be the G first. So starting point is G. Get that right, and then you're on your way. You look at TCFD adoption. TCFD also depends on G. So TCFD has 4 pillars: the G, the S, the R, and the M. Governance, strategy, risk management and metrics, and data gathering. So the G is the first pillar. So deal with G first. Otherwise, if you don't deal with G, the rest all will not happen properly.
Wanchen, we come to the end of the sessions, and we are overwhelmed by the interaction or even by the response and questions from the participants here at EEA. And just want to reiterate that don't forget we will have a photo session. This is the last poll from us. We just want to get the last poll from us. Is it okay for EEA counterparts Ibu Dewi or Pak Abdiansyah to run the next poll for us before we conclude the session? So the question is to get actually in EEA, in the population of EEA members here. Do you have the leadership buy-in to drive ESG reporting process in your current company today? Okay, so around 30% say they do not have the buy-in. Around 50% they do have somewhat buy-in from the leadership to drive ESG reporting, and that around 22% yes, they have a buy-in from the board or their leadership for this ESG reporting. Yeah. Thank you very much. And the next slide is actually for us to know whether maybe Pak Abdiansyah or Bu Dewi can help for the last poll. Okay, how would like to get participants, how useful have you found today's webinar?
Thank you, participants.
Thank you so much. Thank you so much. And Pak Wanchen and Bu Joan, of course, would want to connect. Please connect with us. We have a website in blacksunplc.com. We do have a personal LinkedIn. You can connect with Pak Wanchen there. And of course, with EEA, we would like to thank EEA counterparts very much for enabling this panels, enabling this forum, allow us to give this webinar to Indonesia members, internal auditors in Indonesia. And I remember that there will be a session for photos. Maybe Pak Abdiansyah would like to
yes, Mutia, thank you.
Sure, Pak.
Yeah, Mbak Dewi, can we have photo session with our distinguished speakers here and our beloved member?
Ya, baik Pak. Ya, baik, Bapak Ibu, kita akan memulai untuk sesi foto terlebih dahulu. Mohon untuk dapat dibuka video Bapak Ibu agar saya dapat mengambil foto Bapak Ibu. Baik, bisa kita mulai Bapak Ibu. 1, 2, 3. Sekali lagi ya Bapak Ibu, gayanya mungkin ada gaya, bisa bergaya bebas. 1, 2, 3. Ya.
Terima kasih Bu Dewi.
Terima kasih Mbak Dewi. Mutia and our colleague from Blackstone, do you have some short closing remarks?
Please, from Wanchen or Joanne.
Take the DCFD training.
Yes.
Yeah, DCFD training, yeah, to prepare internal auditor in Indonesia for the next wave of ESG reporting. All right, thank you. Thank you. So then, thank you again, Wanchen, Joanne, and also Mutia for the great sharing. It was a pleasure for us, yeah, to have you here sharing about important topic, ESG thank you also for member and participant for attending and engaging. I count the question from the start of webinar up to now is 40 questions. 40 questions in 2.5 hours. It's very engaging. Thank you, member and participant. We hope you have learned and enjoyed this forum. We hope to see you again in another EA Indonesia Professional Auditor Forum. And mark your date for EA Indonesia National Conference in October, in early October, yeah, in week 1 or week 2 October. All right, maybe that's all from me as chair for this webinar. Thank you all. I give back to Mbak Dewi.
Baik, thank you to Mr. Wanchenloh, Mrs. John Lee, and Ibu Muti Ananda dan Bapak Abdiansyah Prahasto atas pemaparan materi yang diberikan. Kami berharap dapat memberikan insight dan tambahan ilmu yang bermanfaat bagi pekerjaan Bapak Ibu yang hadir pada pagi hari ini. Dengan demikian berakhir pula acara Professional Auditor Forum hari ini. Sebagai informasi, materi diskusi hari ini dapat di-download pada web EA Indonesia dan untuk sertifikat kehadiran akan dikirimkan ke alamat email Bapak Ibu masing-masing. Selain itu tidak lupa kami ingatkan kembali di bulan Juli ini kami memiliki beberapa training yang dapat Bapak Ibu lihat pada web EA Indonesia. Dan sebagai informasi kembali, tahun ini kami juga akan menyelenggarakan National Conference yang akan dilaksanakan pada bulan Oktober secara offline di Bali. Update informasi terkait NatCon ini dapat Bapak Ibu lihat pada website Indonesia atau menghubungi kami via telepon, email maupun WhatsApp. Saya mewakili panitia mengucapkan terima kasih kepada Bapak Ibu yang sudah berkenan untuk berpartisipasi dalam acara ini. Kami juga memohon maaf apabila dalam pelaksanaannya terdapat kendala dan hal-hal yang kurang berkenan lainnya. Sampai jumpa dalam Professional Auditor Forum selanjutnya. Selamat pagi, salam sehat. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Terima kasih Bapak Ibu.
Terima kasih Bapak dan Ibu.
Selamat berakhir pekan.